This video is created by Jagrat Creations. It is on capital reduction, that is internal reconstruction. I wish to solve one sum on capital reduction. Just observe the sum on the screen. This sum is being asked in IPCC examination recently. Following is the balance sheet of Star Limited as on 31st of March 2015. Equity liability total 24,90,000. Assets total 24,90,000. Shareholders fund, share capital, preference share, equity shares, reserves and surplus, profit and loss account, debit balance is given to you. Non-current liability, A debenture, B debenture 3,50,000. Current liabilities and provision, workmen compensation fund, trade payables total 24,90,000. Assets, non-current assets, tangible assets, Bombay Works, Chennai Works. Investment of workmen compensation fund 15,000. Current assets, inventory, trade receivables, cash and bank balance. A reconstruction scheme was prepared and duly approved. The salient features of the scheme were as follows. Paid up value of 8% preference share is to be reduced to 80. Share of 100 reduced to 80, but the rate of dividend be increased to 9%. So 8% preference shares are to be converted into a share of preference share of 9%, but the paid up value of the share will be reduced from 100 to 80. So there is a 20% reduction of this 9 lakhs. Paid up value of equity share to be reduced to 10, share of 100 reduced to 10. Directors to refund 50,000 of the fees previously received by them. So there is a refund. So director fees is an expense. The expense is refunded. It is an income or a gain that will be credited to capital reduction account. Debenture holders forego their interest of 26,000, which is included amongst the sundry creditors. So trade payables include debenture interest, which is being foregone. So liability foregone. Reduction in credit balance, reduction in liabilities again, capital reduction account gets credited. Preference shareholders agree to waive their claim of preferential dividend, which is in arrears for last 3 years. So preferential dividend has not been paid since last 3 years. They have waived it. Means they are not going to claim any dividend as against the arrears of preferential dividend. But the liability of preferential dividend is not apparent, is not disclosed liability in the balance sheet. So it's an undisclosed liability, unrecorded liability. And when the unrecorded liability is being foregone, no entry could be recorded. Because if the liability is already there on the liability side of the balance sheet and if it is foregone, it is identified as gain and credited to capital reduction account. But unrecorded liability, just like preferential dividend arrears, which is an unrecorded liability on the face of the balance sheet. So unrecorded liability foregone, no entry could be recorded. B 6% debenture holders agree to take over Chennai Works for 4,50,000. Chennai Work is 7,75,000. The agreed value at which it is being taken by the debenture holders is 4,25,000. So reduction in the value of Chennai Works, Chennai factory, that reduction is the loss, that difference between 7,75,000 and 4,25,000 being lost will be debited to capital reduction account. And to accept the allotment of 1,500 equity shares of rupees 10 immediate par. So we are going to issue shares to the debenture holders. They will become our shareholders. How many shares are going to be issued to them? 1,500 shares are to be issued to them, each of rupees 10. So 15,000 is to be recovered from them as against the allotment of the shares, allotment of our shares to them as per the agreement. And upon their forming a company called CA Limited take over the Chennai Works, they allotted 9,000 equity shares of rupees 10 each fully paid to Star Limited. And in exchange, we got 9,000 shares of rupees 10 each from a company formed by debenture holders. So this is a very important transaction which I would like to explain you first of all after reading this sum. Chennai Works Compensation Fund is disclosed that there were actual liability of 1,000. So Workmen Compensation Fund is there as a liability and there is an investment. Out of that 1,000 liability and the corresponding investment is required to be maintained. Remaining can be the liability not payable will be transferred to capital reduction account and the remaining investment not required against the provision, they will be disposed of. The stock was to be written off at 1,20,000 and provision for doubtful debt is to be made to the extent of 20,000. Chennai Works completely written off. Any balance in capital reduction account be applied 2/3 to write off the value of Bombay Works and 1/3 to the capital reserve. Past necessary journal entries in the books of Star Limited after the scheme has been carried out. So we are required to write out the only journal entries. As I told you, I am going to explain you this transaction first of all. 6 transactions will be explained to you first of all. I will write down the journal entry for 6 transactions. And after that, I will start the sum 1, 2, 3, 4, 5, 7, 8, 9, 10 like that. Let me start. So here I am going to prepare one working note for that. B debenture holders 3,50,000. 6 point. B debenture holders agreed to take over the Chennai Works for 4,25,000 so far. So my liability towards debenture holders is 3,50,000. See, here I am preparing one explanatory chart for you, and I will explain to you that I will explain the transaction with the help of this chart, and after that I am going to write down the journal entry. So liability towards B debenture holders as per my balance sheet is 3,50,000, and they have agreed to take the Chennai Works. 6% debenture holders agreed to take over the Chennai Works for 4,25,000. So they have agreed to take the Chennai Works, Chennai factory for 4,25,000. So debenture holder 3,50,000, my liability is 3,50,000. The asset to be transferred in favor of them 4,25,000. So asset value transferred is more than the liability. So I am required to recover something from them. This is the understanding of transaction so far explained to you. Now my Chennai Works. In my books of accounts, my Chennai Work is 7,75,000. It has been taken by debenture holders at the agreed value of 4,25,000. So this Chennai Work valued at 4,25,000 and given to debenture holders. So 7,75,000 minus 4,25,000 is a valuation loss. That loss is to be written off, and for that capital reduction account gets debited. So capital reduction account will be debited with 7,75,000 minus 4,25,000. So 3,50,000, the reduction in the value of factory will be debited to capital reduction account. So debenture holders 3,50,000, they are given Chennai Works, book value 7,75,000, they are given to the debenture holders at an agreed value of 4,25,000. Now the another important point to be noticed, the liability is 3,50,000, the value of asset transfer is 4,25,000. Now let me read the further. Now, and to accept an allotment of 1,500 equity shares of rupees 10 each. Now debenture holders wants to become the shareholder of my star company. For that they have agreed to take the shares of my company, and when I allot the shares to them, I am required to collect the exchange value for shares allotted from them. So how many shares are allotted? Accepted the allotment of 1,500 shares of rupees 10 each. So 15,000 rupees are to be recovered from them. So I have given them Chennai Works for 4,25,000, that is also recoverable. I have allotted them the shares of 15,000, that is also recoverable. So total amount recoverable is 4,25,000 plus 15,000. Against that, liability to be settled is 3,50,000. So remaining amount debenture holders are supposed to pay to me. So amount due from debenture holders is how much? I have given Chennai Works 4,25,000, that is recoverable. I have allotted shares of 15,000, that is also recoverable. So 4,25,000 plus 15,000. So 4,40,000 rupees are recoverable. Against that, my liability, my obligation towards debenture holders to pay them is 3,50,000. So my obligation is deducted. So amount due from debenture holders is 90,000. Now for this 90,000 to be recovered from debenture holders, what do I get? I get 9,000 shares of rupees 10 each of Zia Limited. So receive 9,000 shares of Zia Limited, each of rupees 10 each. So this is how I got 90,000. This is the total transaction. My obligation 3,50,000. I gave Chennai Works 4,25,000. Reduction in the value of Chennai Works 3,50,000. That is my loss that will be debited to capital reduction account. I am also required to recover 15,000 from debenture holders, means from a company formed by debenture holders Zia Limited. I am required to recover 15,000 from there as shares being allotted to them. So total value transferred by me is 4,25,000 plus 15,000. Against that, my obligation towards debenture holders is 3,50,000. So what has happened? Still I am required to recover from debenture holders. In that exchange, I get equity shares of new company Zia Limited. So this is how this transaction is being explained to you. Now I want to write out the journal entry for that. Just observe. Now in the books of Star Limited, first of all, capital reduction account is debited with 3,50,000. To Chennai Works account credit, 3,50,000. I am required to pay 3,50,000 to debenture holders. So B debentures account debit to debenture holders account credit, 3,50,000. Now how the exchange has taken place. Debenture holders are paid 3,50,000. So debenture holders account debit 3,50,000. I have received the shares of new company. So equity shares of Zia Limited, then I receive debit what comes in. So equity shares from Zia Limited account debit 90,000 to what I have given? Chennai Works. Chennai Works, I have given, transfer the ownership of Chennai Works to debenture holders company. So credit what goes out, asset is given. Debit what comes in, credit what goes out. So Chennai factory is given. So Chennai factory account, Chennai Works account is to be credited. And equity share allotted, that will be credited to equity share capital account. This is how the exchange entry is being recorded in the form of transaction. So this is how this transaction is being recorded. Debenture holders are paid 3,50,000. So my liability settled 3,50,000. I got the shares of Zia Limited 90,000 debit what comes in. I have transferred the Chennai factory, Chennai Works 4,25,000. And also I have allotted the shares of 15,000 to a new company or say debenture holders. This is how the journal entries are recorded. Now in light of this journal entry, these three journal entries are recorded for point number 6. Notice it, because I wanted to take care of important point first of all. Now I proceed with the sum. Here I am going to prepare capital reduction account. In this entire 3 transaction, capital reduction account is debited with 3,50,000. Capital reduction account debit to Chennai Works account credit. I am not required to prepare the balance sheet after recording the journal entry. I am required to record only journal entry. So I just prepare capital reduction account only. Now I continue with the sum as it is. Adjust number 1, 2, 3. Paid up value of 8% preference shares is to be reduced to ₹80. But the rate of dividend is raised by 9%. So preference shares of 7% preference shares are given 8% preference shares under capital reduction scheme, under internal reconstruction scheme. So this 7% preference share capital account will be debited. 8% preference share capital account will be credited. But the paid up value of the new preference share is 80, so 20% less. So 9 lakh into 20%. 1,80,000 will be transferred to capital reduction account. Capital reduction account is credited. So the journal entry for that is, see, 7% preference share capital account debit 9 lakhs. To 8% preference share capital account credit 9 lakh into 80%, 7,20,000. And 20% is the capital reduction. So capital reduction account is credited with 1,80,000. That is the difference. So I write to the credit side of capital reduction account 1,80,000. This is how first transaction journal entry and its posting only to capital reduction account is being done. Next. Paid up value of equity share is to be reduced to 10. Share of 100 reduced to 10. So 90% reduction. Total capital 10 lakhs. 90% thereof 9 lakh is transferred to capital reduction account. That is a contribution made by equity shareholders to write off the accumulated losses. And The accumulated loss is apparent on the face of the balance sheet is profit and loss account debit balance 2 lakhs. So 9 lakh is the contribution made by equity shareholders. Let me write down the journal entry for that. Equity share capital account debit 2. New equity share capital account credit 10 lakh into 10%. To capital reduction account credit 9 lakhs. 9 lakhs rupees are credited to capital reduction account. See, I have recorded the journal entry. I have not recorded the narration. You can write the narration in your own language. You know it very well. Being equity share of rupees 100 converted to a share of 10 each as per capital reconstruction scheme. You can write the narration in that fashion. Next, third point, debenture holders refund 50,000 of fees previously received by them. I got the refund of fees, bank account debit. It's an income gain. Capital reduction account is credited for that. So capital reduction account is credited with 50,000 being cash received by way of refund of director fees. So 1, 2, 3 points are over. Now next. Debenture holders forego their interest of 26,000 which is included in sundry creditors. So trade payables. Trade payables are sundry creditors which includes debenture interest obligation and that is not payable. So reduction in liabilities again. So trade payable account debit 2. Capital reduction account credit 26,000. So capital reduction account is credited with 26,000. Now, as I told to you, preference shareholders agreed to waive their claim for preference share dividend, which is in arrears for last 3 years. Here on the liability side, you won't find anywhere the recorded obligation towards the preference share dividend arrears. So it is an unrecorded liability, and when the unrecorded liability is foregone, no entry. No journal entry is required to be recorded for that. Now, 6 point is already done. 7th, 6 point is already done. That was the first point taken by me. The Chennai Works Compensation Fund disclosed that there were actual liability of 1,000 only. Now see, the Workmen Compensation Fund provision existed 5,000. Real liability existed 1,000. Provision in excess of liability is known as surplus. That surplus will be transferred to capital reduction account. Here if you look at the investments, 15,000 are the investments for this liability, for this provision. This is the provision 5,000. I want to maintain a provision of 1,000 because actual liability exists. So I want to maintain the investment of 1,000 and the liability of 1,000. So remaining investments are available for me to sell, and 4,000 is a provision for which no liability exists, and that provision without liability is known as surplus, and that will be transferred to capital reduction account. Now these investments are sold at a profit of 10%, so 1,400 is the profit. So amount received 15,400, and that amount is paid to creditors. So first, Workmen Compensation Fund 4,000, provision for with no liability is a surplus, that will be transferred to capital reduction account. So capital reduction account is credited with 4,000. Workmen Compensation Fund provision for with no liability exists. Now the investments are sold, bank account debit to investment for Workmen Compensation Fund account credit, profit thereon is credited to capital reduction account. So capital reduction account is credited for that. Now out of these proceeds, the creditors are paid. So trade payables account debit to bank account credit 15,400. Now next, stock is to be written off by 1,90,000. So capital reduction account is debited with decline in the value of stock, and for provision for debtors also the capital reduction account is required to be debited. So capital reduction account debit, what amount, that I will find out later on. To provision for doubtful debts 20,000. To stock, inventory 1,90,000. So total of these two will be debited to capital reduction account, provision for doubtful debts and inventory. Chennai Works is completely written off, that we have already done. 3,50,000 for Chennai Works is already being written off. Now, The available capital reduction credit will be applied to write off the losses. So profit and loss account debit balance is required to be written off. So capital reduction account debit to profit and loss account credit 2 lakhs. Now, any balance in capital reduction account, how much is the balance in capital reduction account? Let us find out. Out of that, 2/3 will be applied to write off the value of Bombay Works, and the remaining 1/3 value will be transferred to capital reserve. So here, let me find out the balance in capital reduction account. So total of credit side 11,61,400 minus 3,50,000, 20,000, 1,90,000 and 2 lakhs. So here you can find out the balance in capital reduction account. So balance in capital reduction account is 4,01,900. Out of that, 2/3 should be applied to write off the amount of Bombay Works. So 2/3 thereof, 4,01,400 into 2/3. So this is the amount to be applied to write off the amount of Bombay Works, and remaining will be transferred to 1/3 will be transferred to capital reserve account. So I just substitute 4,01,400 is bifurcated in these two numbers. So 2,67,600 and 1,33,800. I just change it. So my capital reduction account is. In light of this, let me write down the journal entry. Capital reduction account debit 4,01,400 to Bombay Works account credit to capital reserve account credit. This is how capital reserve is credited with 1,33,800. After this reduction scheme, we are not required to prepare the balance sheet as it is not questioned to us. So we just write down the journal entries. So this is how I have recorded the journal entries for the given sum. Now, let me demonstrate all the journal entries that I have recorded for this sum at one place. Just observe them on the screen. So these are the various journal entries that has been recorded by me. This is the capital reduction account prepared. Why capital reduction account is prepared, though not asked? I have prepared capital reduction account to find out this missing number of 4,01,400, and for that purpose I have prepared this capital reduction account. If I prepare this capital reduction account then and then I can find out this missing number, and in light of that, amount to be 2/3 amount to be written off against Bombay Works and the amount to be transferred to capital reserve account can be worked out. So this is prepared just as a working note for your better understanding. Here these are the journal entries that I have recorded, for which I have not recorded narration. I know that you are competent enough to write down the narration in your own language. I feel that you have followed all these things. Thanks to all of you.